Good morning, everyone. Glad to see you guys this morning. And with that, I'd like to, for each and every last one of you to introduce yourselves. I will call you by name the way I see you on my screen. Our speaker will be the last one introduced, and he'll introduce himself and his topic. So with that, I'd like to start with Mr. Gerald Callen, please. If you are not speaking, could you please mute? Go ahead, Gerald.
Good morning, everybody. I'm a lawyer in and around Indianapolis, Indiana. I specialize in settling estates and settling trust agreements when people get promoted. And if you don't know what being promoted means, call me later and I'll explain it to you. I also do some personal injury work and write a lot of wills and trusts and things like that. So I asked for today would be a situation where an estate or trust needs to be settled, or where there's a huge personal injury case where justice needs to be served.
All right. And just as a reminder, please make sure you state your name, where are you located, and give me at least a minute or so of what you do. Nick Sullivan, please.
Yes, good morning, everyone. Nick Sullivan here in Raleigh, North Carolina, but can work across the nation. I work with business owners to identify opportunities to improve their cash flow and profitability by identifying federal programs that 90% of business owners aren't aware of. If they're commercial property owners, they hire employees, could be like veterans we mentioned earlier. They do research and development to improve products and processes. There's thousands of dollars that can benefit the business. Takes about 15 minutes to run the software to identify these opportunities, and a team of experts on contingency go out and capture these benefits. Good referrals are CPAs, commercial real estate, commercial insurance, and as far as business opportunities, Main Street businesses from small to large. Again, it's Nick Sullivan, Sullivan Business Solutions, protecting businesses and the bottom line.
Thank you, Nick. David Garrison, please.
Morning, I'm Dave Garrison, Mutual of Omaha Mortgage down in Martinsville, Indiana. Real quickly, I want to give a shout out to Rhoda again. As you all may know, Rhoda writes a weekly blog for me. And I had some validation this week, maybe a success story from a wealth advisor that I've worked with before, but haven't heard from in a long time. Sometimes they keep quiet, but he had a client in mind he wanted me to talk to, and he had thanked me for continuing to provide kind of that weekly education, which you don't always get a lot of feedback on that, but he was appreciative of that. So anyway, I work with wealth advisors, attorneys, CPAs, and those that in the 62-year-old and better age demographic, and using their home and making it into a kind of a non-market correlated asset that is guaranteed to grow as a way to reduce risk in retirement, ensure liquidity, improve cash flow.
Thank you, David. Rhoda Israelov, please.
Good morning, everyone from Indianapolis, Indiana. My team and I at Say It For You do just that. We write what you read when you go on our clients' websites. And we write, as in the case of mutual mortgage, you know, we're writing the shift into reverse weekly send out to financial advisors that are case studies in a way of people who have used reverse mortgages. So what we're trying to do is show that our clients are in the now. They understand the value of current digital marketing materials, and they're in the know that they have something unique to add. And Dave is a very, very knowledgeable reverse mortgage person. So he, you know, I've given him all kinds of questions, and no matter what I come up with, he always understands the answer and understands how to explain it to me, so I can in turn explain it to his potential clients. So there are 4 or 5 subcontracted writers, and together we have Say It For You A, where we're working directly with clients, and Say It For You B, where we're working under agencies to execute their marketing campaigns for their clients. So we say it for you.
Thank you very much, Rhoda. Zach Fox, please.
Good morning, everyone. Zach Fox with Edward Jones Investments, and we are providing investment advice and services for businesses and individuals. We just came out with an analysis tool It's called My Priorities, and it really helps us fully understand each individual investor's priorities when it comes to outlook and giving to charities, saving for emergencies, that sort of thing. So it's a really, really in-depth tool that helps us have more in-depth conversations with clients. So it allows us really to align your portfolio with your priorities and your purpose. So that is out, and anybody that's interested to check that out for their own benefit, I can get that out to you. So, but I'm helping individuals and businesses invest and plan for the future with their finances.
Thank you, Zach. And we got to talk about that art behind your head after we do these intros here, buddy. Rodney, please.
Hello, this is Rodney Wade with Schooley Mitchell based in Indianapolis, Indiana. I help businesses and nonprofits eliminate the stress of managing vendor expenses while ensuring they're getting the best price possible with no upfront fees or risk and without switching vendors in areas such as telecom, credit cards, shipping, waste, electronic logging devices, e-signatures, utilities, and fuel. I can work with any small to medium-sized business or nonprofit. Right now, I'm focusing on title companies, auto dealerships, nonprofits, and construction-related trades, such as HVAC and plumbing. Good referral partners for me as well are CPAs, fractional CFOs, small business IT consultants, financial advisors. Thanks.
Thank you, Rodney. Last but not least, Jerry, Lucco, and Kat. I saw the tail. Jerry.
Yeah, she's eating breakfast, Keith. So she'll come back and say hi later. Jerry Lucco with Franchise Business Source. So I help people that want to be business owners, aspiring entrepreneurs, and experienced franchisees or experienced investors find a perfect fit franchise business that gets them money, lifestyle, kind of the work involvement that they've been dreaming of and hoping for. Not everyone wants to start from scratch and reinvent that wheel, and a franchise business they provide a support system, they provide the operating playbook, and they provide an instant tribe in terms of that support network of other people that are doing the same kind of business, so you can ask questions and learn from them and not have to go it alone, even though it's your own business. I would love to meet people that are business investors. Also, as I said earlier, anyone who's associated with economic development in an area, or CPAs too. CPAs that focus on small business versus anyone who's working on kind of a personal taxes or something like that.
Thank you, Jerry. Well, thank all you guys for showing up this morning. Our speaker this week is Mr. Dan Moore. He's chairman of the Federal Home Loan Bank of Indianapolis. He'll introduce himself and his topic. And with that, Dan, you are now in charge.
Thank you. That's quite a group you've pulled together here.
Thank you.
Interesting cross-section of interest. My story is I just retired from Home Bank, a community bank in Martinsville in January after 43 years, where I had been the CEO for about 15 years. So I'm newly retired. I recommend it for you folks if you don't have it in your plan, but I've remained extremely busy. So I'm going to talk about 3 initiatives that I'm involved with. And at first you'll say, what's the connection? But I think you'll see there is a connection. One is the community bank environment. The other is the Federal Home Loan Bank system, where I am chairman of the Federal Home Loan Bank of Indianapolis and also on the Council of Federal Home Loan Banks. Next year, I'll be the chairman of the Council of Federal Home Loan Banks, which is the trade organization for the 11 federal home loan banks in the country. And then another place I spend a lot of time is Stability First, which is a facility for homeless women. And so that's where I'm spending most of my time. So they are interconnected. So let me just talk a little bit about, I'm calling this behind the scenes. I know we have a friend from the financial services industry, so this may not be new, but some of you may not realize what some of these things that go on behind the scenes. So let me start off by characterizing the current environment of community banks. Often I hear, what's the future of community banks with all the consolidation that we're seeing, the mergers and acquisitions? And I, for some time, have said eventually there'll be de novos, which are new startup banks. And the Federal Reserve and the FDIC have resisted that. But now in recent months, we're beginning to see new banks start up. And I remember a partner at BKD once telling me about 5 or 6 years ago, as he would travel around Indiana to communities where there was no community bank, he could see the economic impact of that. So clearly, I'm a community bank proponent, but I think it's good news that our capitalistic system has realized there's a opportunity in our communities for community banks to start up again. So these de novos are starting up from scratch for the first time in probably about 10 years. So that's the good news. There are challenges. I know someone on the group is talking about digital solutions for banks, and we're competing with fintechs. For you that don't know, fintechs are digital solutions in banking and other activities. But I think the evolution is the fintechs don't like to put their toe in the regulatory environment. I think what we see, the long-term solution is going to be fintechs partnering with banks, because the regulatory environment has constraints that I don't think the fintechs and private equity capital want to deal with. So my prediction is that, yeah, fintechs are alive and well, but we don't really, we look at them as more partners in the future as opposed to competitors. So that's kind of where we've evolved to. The low interest rate environment right now is challenging to banks. Bank earnings are really very good. Delinquencies are historical lows, which is kind of counterintuitive when you think about the fact we're in a COVID problem. But the stimulus package is to answer all that. There's no reasonable rationale why delinquencies would be so low in this kind of environment. So it clearly is a stimulus package. And we are very, very liquid. Our bank has grown to over $400 million. And probably 3 years ago, we were about 275. So our growth has been exponential, and it's been on the liability side. The asset side, loan demand is very tepid on the commercial side. Housing demand is extremely strong. But most banks do not keep those loans on their books because they're 30-year fixed rate mortgages, and the interest rate risk is too challenging. So our assets are decreasing as we make mortgages, sell them, make fee income, and then that money goes back in the balance sheet. So we're buying municipal bonds and those kinds of things. So the typical bank is extremely liquid right now, very tepid loan demand. Lots of people are parking money in banks waiting to see what's going to happen through COVID. This Delta thing is also, I think, somewhat of a concern, not somewhat, but also a concern to the financial area. Probably cybersecurity risk is the big risk we all face in banking, and that is not just the Federal Home Loan Bank of Indianapolis, but all community banks. But I guess my story would be this, that community banks are alive and well. I think a good indicator is that lots of capital, lots of reserves to weather the next storm, which is coming. I've been through these credit cycles before. It is coming. I can't tell you when, but it is around the corner where we will have our delinquencies will begin to be impactful. If you just look at the moratorium on foreclosures and rentals, common sense says when that goes away, there's going to be some pain. And we're all going to feel that, unfortunately. And it impacts the most people that are most at risk anyway going into this, which is really a shame. The one success story, I picked up on that earlier, that I'll share with our bank, and then I'll move on to the Federal Home Loan Bank, is about 8 years ago in Martinsville, we had a major flood. This wasn't the 100 floodplain. This was the 500-year floodplain, which means the 500 floodplain means you weren't required to have a flood insurance, and the likelihood of a flood was once every 5 years. Well, we got hit by that. At the same time, our largest employer, Harmon Becker, took a number of jobs and went to Mexico. And that was in 30 days of the Lehman Brothers meltdown, which was in the 2007-8 area when the global financial crisis hit. So we were hit with all three of those things within about 90 days. Fast forward about 2 years, as I'm talking to my fellow CEOs and banks around the state, they were seeing recovery, and we weren't, because we just had too many body blows. We just did not come out of that. So we went to the board and we said, we're not sure what to do about this, but we feel we've got a responsibility. And we were able to convince our board to start tithing. So we started giving 10% of our earnings back to not-for-profit. Body, soul, and spirit was the criteria. And we set up a group of not officers or directors, but employees in the bank every quarter to make a decision on how they allocate that money. And I would say that is the most impactful thing that I've ever been involved with in my almost 50 years of banking. It absolutely changed our culture. It changed our brand. It changed the way we look at all of our business. And anybody will listen to me. If you ever consider really making a dramatic change in your operations, think about giving 10% of your earnings back. We had the best earning years we've ever had last year. The initial argument is, how can you give back 10% when you've got a bottom line to take care of? I don't understand it. Well, I think I do understand it, but it works. And if I could segue to the millennials, they say millennials will work for and do business with people give back. I'm here to tell you that's true. We've attracted millennials, and they've not left us. I mean, they're bright, they're intelligent, but they really have buy into this give back piece. So it's more than just literature. We've experienced firsthand that it is real. So that's kind of the home bank story, my community bank story that I cherish. And I think the most important thing that I will tell anyone is that giving back of 10% has absolutely changed everything. Absolutely changed everything. Then I'll segue to the federal home loan bank system, which is a mystery to a lot of people. There are 3 government-sponsored enterprises: Freddie Mac, Fannie Mae, and the federal home loan bank system. You've probably heard of Freddie Mac and Fannie Mae. They've been in the news, and that hasn't been a good story. All 3 were formed in the 1930s as a result of the Depression, along with the FDIC. Freddie Mac and Fannie Mae were privatized maybe 20 or 30 years ago. And in 2007, 2008, you know the story, they imploded because of delinquencies, and they still are in conservatorship. So that has not been a good story. So we have to make sure the federal home loan bank system, since they're a GSE, is not somehow affiliated with them, other than we were formed at the same time. But just like Home Bank, which is a cooperative, or a mutual, which I failed to mention, the federal home loan bank system is also a cooperative. We are owned by our members. There's 6,800 banks, credit unions, and life and insurance companies around the country that are a member of the 11 federal home loan banks. The Indianapolis Bank is $62 million in assets, $62 billion, excuse me, and that covers Indiana and Michigan. Yeah, the billion, there's 3 more zeros I forgot about, which does impact your daily operations. The role of the Federal Home Loan Bank, simply put, is to provide liquidity to the banking, credit union, and life insurance companies. And if you look back into 2008, 2007, we served the purpose. The Federal Home Loan Bank system was almost one of the ones, along with the Federal Reserve, and also during the initial pandemic last spring, that provided liquidity to the system to help the system stay vibrant through a very difficult time. And the way we do that, there's the Office of Finance issues consolidated obligations. They call them COs. And consolidated obligations are purchased by mutual funds, insurance companies, investors, and they're not backed by the full faith and credit of the United States government, but they have an implied guarantee. So they're able to raise money at a lower amount. The federal home loan banks use the Office of Finance as their conduit, which allows them to loan money to the members of the Federal Home Loan Bank at a discounted rate that we in turn can loan money during liquidity crisis or asset liability strategies to the member banks, if that makes sense. So it's a pretty simple model, but believe me, the regulatory environments and the derivatives and the hedging strategies are anything but simple, because they can't take on any interest rate risk because their margins are so narrow, because there's too many middlemen involved. They cannot take on an interest rate risk. So have very, very sophisticated derivatives models that are driven by really, really smart people in the system. Another beauty of the Federal Home Loan Bank system, here again, I find myself in the same environment. They also give 10% of their profits back to affordable housing. So I've been up close and personal to someone mentoring veterans. A lot of grants are given to veteran solutions for housing, to disabled people for housing, for diverse people in housing in many metropolitan areas. The Indianapolis Bank has just opened up a new office in Detroit to help Detroit work out of some of its problems in terms of strategies for affordable housing. So the two orgs I spend most of my time with warm my heart that they all give 10% back. And I think that's absolutely key. That's the reason I'm involved with them. And the impact is absolutely dramatic. The last thing that I spend some time on is stability first. And here's how I connect all this. Let's go back when we started tithing in our bank, and we said, what can we learn about this? And first of all, we didn't know anything about poverty. We'd seen poverty, but I didn't understand the poverty. I didn't understand what it was like to live in poverty. So we knew that there must be a common language and awareness we needed to build. So we invited Ruby Payne, the author of Bridges Out of Poverty, into our community. We had a community forum with about 125 people. It was very successful. We brought her back again, her team, and we had another group. And out of that, we determined, we have a steering committee, and we determined a lot of things. And first of it was we read the book Bridges Out of Poverty to help us understand poverty and what it's like and what it's like to live in that environment. And out of that, there was a steering committee that determined that if you were a woman, a single woman, and homeless, there was no safety net. Hard to imagine, but in our community, if you were a homeless family, we had a solution. If you were a homeless man, you had a solution, but for a homeless woman, we didn't. So we started stability first. We didn't have a building. We didn't have anything. So a gentleman in our community gave us a building, but then where's the $250,000 going to come to renovate it? Well, we went to here's the magic of the Federal Home Loan Bank. Home Bank sponsored Stability First to get a grant from the Federal Home Loan Bank of Indianapolis for $250,000, and that grant was used to build out Stability's first facility. We call it a Magnet House. And today we have on ongoing basis 16 women that are there, and we give them how to interview. We make sure they got their college degrees. We have Bible studies. We have financial resources, and it's a place where there's been enormous success where we're bringing these ladies up and getting them out to be major persons of society. So all three of my endeavors are connected. Home Bank as the sponsoring bank, the Federal Home Loan Bank as the source of the grant, and Stability serves the resource or the recipient of the grant. So shortly put, that's how you can take community banking, a quasi-governmental agency, a not-for-profit, and connect all of them for the greater good. I might also say that the Federal Home Loan Bank doesn't use $1 of federal funding. They're completely owned by their members. We get a dividend, a bifurcated dividend, which means that the more business we do with the Federal Home Loan Bank, the bigger our dividend is. So they and they're all both cooperative. Home Bank is not a stock organization. We're a mutual, just like The Wonderful Life with Jimmy Stewart. Remember that movie? That was a building alone. That was, and we're still, since 1890, we don't look anything like a building alone. Our balance sheet looks like a commercial bank, but that's that same business model of a mutuality. The Federal Home Loan Bank is cooperative, which means they're owned by their members. And then that is the connection. That's what gets me out of bed every morning. So I don't have no idea how long I went, but that's kind of a summary of how I spend my time. And I can go on and on and on, but I have to be careful. I'd be more than willing to accept any questions for anybody if anybody has any. Is that okay?
Yes, Dan. Hey, okay. Every once in a while I get a speaker that I want to talk to after the conversation, because I do have some questions for you. But there's, oddly enough, you brought up something that is real in the marketplace, and it's not about banking. You made a little comment, and I'm dealing with this right now on an employment situation. You're retaining millennials. It's a small thing, but it's a giant thing, because what we're struggling with is they don't give a damn about money. I mean, they want money, they need money, but they'll go, okay. So, you don't want to pay me 100,000 or 50. I'll go work for 50,000 someplace. I don't care. So that little comment of that somehow you link that mission and the fact that you make money, you got to make money. That's really interesting to me. I'm probably going to give you a call and talk about that, because this millennial retention thing, man, it's really, you buy a professional for $100,000 and they go, screw you, I don't care. And they go work for 50,000 somewhere. Doesn't make sense to me, but if there's a solution, I want to hear it. So that's my comment and my rant. Anyone else have a comment they'd like to make to Dan? Yes, sir, Nick.
Yes, a great presentation. The direction of banking, everything seems to be moving online, but has that leveled out? Are banks still opening up locations? Is there still a lot of people that want to go to banks in person?
Yeah, I think we were fortunate that we did not have a real aggressive branching strategy. So we spend an inordinate amount of time on digital banking. If you were to go to our website, you'd be surprised that a community bank would have a website like that. In fact, we are in the process right now of starting a what we call Spirit Bank, which is the same business model, but it's all digital, because we are afraid that when you hear home bank from 1890, they don't think we have the cool stuff. In fact, we hired an a PR person from a local financial or educational institution, and when I interviewed her, I said, "Tell me the difference between Chase Bank and a home bank." She says, "Well, you don't have all the cool stuff." And I said, "Tell me what the cool stuff is." We have all the cool stuff too. So we just need to brand ourselves so that we can be in the conversation. So we're in the process right now of starting a dual bank, which is Spirit Bank, which you look behind the scenes, it's the same thing. It's just our digital solution is going to be branded differently. But yeah, I think digital banking is absolutely key. But one thing we do know is, going back to millennials, they like the cool stuff, but when they get in trouble, they want to go talk to mom and dad. So what we find out is everything's cool until they get in trouble and they want to come in. They need to hold our hand. So, and we will help them through those problems, where a lot of fintechs and digital solutions solely aren't really positioned to do that. And our life journey is going to be somewhere you're going to get in trouble, and you're going to want to come in and talk to someone face to face. And we're finding that to be true, particularly as people reach out during the COVID situation. And it's going to be more true as we go through another credit crisis, I think. So we do need a certain degree of handholding. So we're trying to live in both spaces. It's been expensive, but it's been worthwhile. I don't think you can be purely digital or purely brick and mortar. You got to be committed to both, in my opinion.
I mean, things are reversing. Amazon today, I just saw on the blurb, they're going to open up department stores. So what goes around comes around.
Right. You just have to have the wherewithal, the financial commitment, because they're big investments, but the payoff is down the road.
Yeah, I got two comments. One thing that's interesting to me is, I've dealt with Chase in the business for 35, 40 years. And the only common thread with Chase was they would be closing branches, and I'd have to go find a different relationship manager at a different bank, multiple times. And how many branches has Home Bank opened down here in the last 5-10 years?
Well, we've been open about one every year for the last 4 or 5 years, because there were markets that we were in that we knew our model would work there, so like Plainfield and Greenwood and those places. So those are markets that we chose because we thought the way of doing business would work there, and so far we've been right.
Yeah. So when's the last time Chase Bank ever opened up a new branch? Right. All they do is shutter them.
I don't know.
The other question I have for you is, so the Federal Home Loan Bank, that is only comprised of community banks. Is that correct?
No. Chase, all the big banks, all the life insurance companies, they're all part of it.
They are.
They're called SIFIs, significantly important financial institutions, Chase, Wells Fargo. But what we have to be careful of is concentration levels. Like some of the banks have an inordinate amount of relationships with SIFIs, these large banks. So we have to be really careful of the concentration level. And one thing I failed to mention is that we are jointly and severally liable. There's 11 federal home loan banks in the system. And if one bank screws up, we're all responsible for it. So we keep tracks on each other. And our business models can be a little bit different. As you can imagine, the Federal Home Loan Bank of New York, their balance sheet looks a lot different than ours, or the Federal Home Loan Banks of Boston, because they've got, and Indiana surprisingly has a large concentration of insurance companies that are major borrowers of ours. But any bank you can think of, large or small, or insurance company or credit union, are members.
Okay.
Yeah. And a lot of banks use it for asset and liability questions. In other words, Dave, if you came into the bank and you were a good customer, you said, I want a 10-year fixed rate mortgage. Well, I'd be nuts to make you a 10-year fixed rate mortgage in this environment. But I can borrow money from the Federal Home Loan Bank for 10 years and arbitrage it, where I could build in a spread and then make you a 10-year loan. So asset and liability management is also something they provide. So you just don't get advances or borrow money for the sole purpose of liquidity. There's also the A&L part of it. Mm-hmm. If that makes sense.
Jerry Lucco, you had your hand up.
Yes, I did. Thank you. So my daughter is a millennial, and you're absolutely right. She loves digital banking, although I've taught her a few things. But she likes being able to go if she has a specific question. She wanted to be able to get a car loan. And so she went into the bank, and she likes to be able to have a person that can answer her questions when she needs them. So you've totally got that right in terms of the model. But on Stability First, like, how you said there's usually about 16 women, but how long do they stay involved with you there? Like,
It depends. We've had
churn.
Yeah, we've had some people have been there a year and a half. We've had others that are there for just a couple of weeks. Many of them have some kind of addiction problem, and many of them have been in the penal system somewhere along the line. As you get to know these gals, you realize a lot of them are really, really smart. Some of them have degrees. I can think of one gal's got an RN, just bad decisions. And it just breaks your heart and all the potential they have. So we don't kick people. Well, it's very prescriptive. We have rules. We have discipline, and we enforce those. And if they don't follow the rules, they're out, because we don't have the time or the resources to play games. So when they come in, we know we're dead serious. We love them to death, but we know we're dead serious. That's where you get the results. And some people progress quicker than others. There's lots of failures as well. Unfortunately, a lot of people, and if you don't have some kind of transitional housing to go right back to where they were before with their former friends, so that's another challenge that we're working on now. We're also working on a men's facility. We're at someone in their will, we were talking about wills, someone gave us a good amount of money and we purchased a building, and now we're working on the men's ministry, a part of it, because the model is working and we're gaining some credibility and some traction. So, but it's hard work.
Yeah, I'd love to talk to you offline about that. So
Sure.
I'll reach out
Glad
to you
to.
offline. But yeah,
Sure.
super interesting.
Dan's information is in the contact that we sent out, so it's personal email. So, but and it'll also be in the recording that we made. Anybody else? I was talking to.
I have a question.
Go ahead, Rodney.
So this is maybe slightly off topic, but it's still relevant. What's your opinion on crypto, and is it ever going to be introduced into the traditional banking system?
Everything I've talked about so far, I was comfortable with because I've been doing it long enough, but I will not get into something I don't understand. I'm going to be honest with you. It's a mystery to me. All the unintended consequences potentially of that. And are we really thinking, I hate to defer on that, but if I don't feel qualified to answer it, I think I probably don't know any more than anybody on this call, because I've just been scratching my head about it for some time. So I hate to kick the can, but great question. I asked it myself.
Yeah, it kind of, I understand it at a high level, but yeah, I kind of have the same question myself.
I just often think about unintended consequences that we haven't really grasped a hold of yet. That's what I'm concerned about. If I could mention one other thing, do we have a minute? Make a couple more minutes?
No, we've got about 8 or 10 more minutes, so It's no problem.
One other thing, this all ties together too. About 3 or 4 months ago, longer, as I started and others started looking at the moratorium on foreclosures, evictions, unemployment benefits, high unemployment in some of our service industries, and my thought about what happens when the stimulus package goes away, and the mental health issues that we're seeing everywhere. As I talk to health professionals, it put on my heart that we're headed for a COVID cliff. And what I mean by that is, when the stimulus package goes away, the eviction notices go away, the moratorium on foreclosures go away, the unemployment benefits go away, I think we're headed for a cliff. And there's been a major separation between the have and the have-nots. A lot of people have done really, really well, obscenely well through this. And a lot of people at the margin are really in trouble. I mean, they are really in trouble. They were already in trouble going into COVID, and they're being artificially held up. When that goes away, I am fearful that we are going to be looking at a major mental health crisis. That's already started, if you talk to health professionals, a major housing crisis, and a potential, as they begin to come off these interest rates, not a great recession like we had, but I think we're headed for trouble. So we've had a conversation with health professionals, long-term and short-term housing, and transportation as well. You think about transportation, the cost of used vehicles, the lack of new vehicles, the fact that the technology of new vehicles, the poor guy down the street used to be able to fix his car. He can't fix it anymore. That's why you see junk cars in people in poverty, because they let their neighbors, they borrow parts from each other. That's not going to go away. So we formed another community meeting. We formed a task force, and have Dave Garrison on the call is chairing one of the task force on housing. And we're doing a hub and spoke where we've got a strategic partner in the middle. We've got leaders in the community driving each initiative: transportation, mental health, short-term and long-term housing. And that's a hub and spoke. And we're gonna work through that. We're going to start coming up with solutions to try and get ahead of the curve on these different initiatives. So that is another outgrowth of Stability First. And as again, Home Bank is kind of underwriting this and is prepared to provide the financial underpinning to make sure this initiative goes forward. So we're committed to make sure we do something. So many times you get involved in these initiatives and people run out of energy because of either financial backing, or you don't have the right seat at the table, or lack of passion. So it's a pretty Herculean undertaking, but we're in the midst of that as well. So that was also an outgrowth of a partnership between the bank, community bank, and a not-for-profit.
Yeah, Dan, that is such a discussion. Obviously, being an African American and dealing with poverty issues in many cases, and not having access to capital. You know, one of the things that you just said was, you know, you need to not only go after the solutions on the social side, you got to deal with the capital side. You can't talk about homelessness unless you can get somebody in a home, but you can't get them in a home unless they have access to capital to get them in a home. And so
right.
you guys' solution that also ties not only we're going to do these social services, but we're going to provide that capital infrastructure. That's a significant change in how you can come up with a solution. Significant change. So I applaud you guys for approaching that. I didn't know David was like that guy, you know?
Oh yeah. Yeah, he's a muckety muck.
Oh yeah.
I didn't know he was that guy.
Yeah,
but yeah, it is great for me to see people who have the expertise and the ability to go after social issues. For those of us who have access, if we ignore the bottom, it will catch us at the top. It's going to happen, people. It is going to happen.
Yeah.
So, David, go ahead.
Something that maybe Dan can, in fact, I know Dan can speak to it much better than I do, but I was doing some mortgage licensing, continuing education yesterday. And there was something, I don't hate to be a Debbie Downer, but there was a comment made, you know, Dan could cite all of the changes made in the Fair Housing Act, the Equal Credit Opportunity Act, all of the things that have been put in place at the federal level to address discrimination in lending, redlining, all those things that have tended to marginalize minorities from home ownership. This surprised, there's been no significant change in 35 years, apparently, as a result of these efforts. That just stunned me. It really did.
Yeah. I think the problem is, and we're gonna, you know, the chairman of the Senate Finance Committee is actually going to, behind the scenes, is calling that the Senate Housing Committee. Sharon Brown from Ohio is very adamant about affordable housing. And I think where we made the mistake, we haven't invited the private sector into the conversation. Federal dollars are going to be coming our way, but I think we'll get more bang for the buck if we're able to partner those dollars in the private sector. I think that's where you get more bang for your buck. And I think that's where the mistake has been.
Yeah.
It isn't just a matter of throwing dollars at it. It's it's using it smartly. And I think the private sector is the answer. I don't think government can allocate those monies properly. I think, in my opinion, that's the reason we haven't had the impact. It's good-hearted and it's sent in the right way, but I don't think it's orchestrated and managed properly. And that's, if we can find a way for the private sector to partner with these, like the Federal Home Loan Bank does. I mean, that 10%, now the Home Bank gives the 10% willingly. The Federal Home Loan Bank, that was a statutory mandate. They have to do that. It's a good thing, but that was a good idea. That's kind of that's a good delivery. And they have a lot of things in place to make sure this money is used properly. So that would be my response, David. I think that would be the best read.
Yeah.
Yeah, and that housing thing, that's the foundation of wealth in America.
Absolutely.
And when that is not able to be addressed, for whatever the reason, it just knocks your knees out because you can't make that next step up because you don't have any capital. Rhoda, go ahead.
CBN has a story with the whole history of the bus lines, because when they were first going to do the electric buses and the red line system, the people who were on the committee actually came and spoke to us at CBN. And I've always taken an interest in it. And my understanding was that one of the reasoning pieces was that it's going to help poor people get to the jobs. In other words, they don't have the money to buy a car or maintain a car. And so the bus system was supposed to be able to get them there. And so somehow it seemed to go wrong. So where are we with that, and how can that help?
Who are you directing that at?
I'm really talking to to our speaker today.
Oh,
okay.
Well, transportation is one of our major initiatives in this COVID cliff. And the reason being is I talked to the chief of staff of the local hospital and asked him, what is your major problem? He said, mental health and transportation. I said, what do you mean transportation? Well, people at the margin come into the emergency room and they have follow-up appointments. They don't show up because they don't have transportation. I said, really? No kidding. That's in mental health. And then we have a major employer here that does hire people at the margin to help them out, to give them skills that they could go on to other endeavors. They can't find a way to get to work. Now, I don't know, in a rural area like us in Martinsville or semi-rural, it's a challenge to find what's the most appropriate transportation system. And we don't have any answers. That's the reason this group has been formed, to see if we can come up with something. Again, I think there's got to be some kind of public partnership, private partnership, because a lot of those mass transportation things haven't made their way outside the urban areas. Again, that's the second time I don't have a good answer. So you guys, I just don't.
That bus system today, the red line, actually goes from the east side, just where there are some blighted areas, and takes them up to the St. V area, and the north side of St. Vincent. So where there are a lot of employers, I don't understand where that went wrong, why that didn't help.
Yeah, there's no easy answers for these. When we had this Jerry, I'm gonna let Jerry's question come in.
Yeah.
Jerry, go ahead.
It wasn't a question so much as a statement, because I live in an urban burb of Columbus, in the Worthington area, nice area and stuff like that. But I'm right across the road from a pretty depressed area. And, like even the bus lines up here, like my stepdaughter's boyfriend or whatever, if he had a job over on the east side, it was like 3 bus changes, and it was like an hour and a half, 2-hour run altogether. You can't do that. How do you do that? If you go to where the jobs are, it's got to be, to your point, it's got to be something that's sponsored to make getting there easier. So I love your thoughts, Dan. It's just really like it. Thank you.
Yeah. Well, I think what we probably end up doing, there are employers in our area, enough of them, that are in dire need of employees at this level, that I think probably what we're going to do is probably work toward a cooperative arrangement where they'll fund something, because they've got skin in the game, right? And by waiting for government to come up with a solution, we've waited long enough. I think that I think there's a possibility we'll be able to rally, and again, some seed money from maybe Home Bank or whoever, to get it started. But then let's see what the results are. And if they work and you can begin to fill your employee needs, maybe there's synergies and maybe some growth potential there. But I think we're kind of tired of waiting on a solution. So we're going to try and come up with something innovative.
Jerry, go ahead.
I'm sorry. Can I throw in another thing? Because,
sure.
And I've seen this firsthand with my foster daughter. When she was looking for a job, call centers were all over the place, but they wanted evenings and afternoons. Well, she has 2 young kids, and there are no daycares. All the daycares shut at 6 p.m. So anyone who wants to work, who can't work like second or third shift, they're totally screwed. She literally had to go for no work because she couldn't find work that she could have her kids into daycare.
Yeah, we can't solve all the problems in this conversation, but there are just multiple problems, and we just take them one piece at a time. Congratulations to Dan and those guys for even looking at using the economic power via the bank to create a social solution for a small bit of what needed to be solved. Nobody's going to solve it all. I'm 100% with Dan that if we expect the government to solve our problems, guess what? That's not going to happen. But, kudos to you, Dan, as we close out. Great conversation. I certainly will be following up with you. I do want to have a little bit of a conversation. So I'll get a time with you, an appointment, because I'm really interested about this millennial thing. This needs to be at least discussed for my organization, because retaining people who don't care about money, other than they just need to live, right? They literally say, I'm okay. I've got my bills paid this month. I'm flabbergasted because I grew up at a time that says, go out there, make that money, make as much as you can. And these guys go, nah, I'm okay. And that's a little confusing with me. So that tells me I need to understand the mission more importantly. So with that, hey, Dan, outstanding conversation.
Thank you.
We may invite you back again on a specific topic. I'd love to hear more about how your social endeavors are turning out and how you lock those in with your financial capabilities. David, thank you for the referral. Great. This would have been a great topic for coffee and conversation next week. So, but with that, hey, thank you guys for all showing up. I will see you guys next week. Thank you very much. Goodbye.